Hello everybody and welcome to the Axia gym. I'm down here having a quick rollout just while it's quiet in the middle of the day. So I committed to running a half marathon with my brother and just started training for it this week. So like a little bit sore after upping my running distance. So then let's go back to the markets. Today's been quite a quiet morning, especially for bonds. The markets haven't really got value developed, and so I think they can kind of move around in this kind of range that they've developed over the last 2 days, having broken out from a prior 4-week range. So I think it's quite hard to find a trade today with really good risk reward. Other than that, I've had actually a really bad morning this morning. I was coming, I felt frustrated, I then found it hard to concentrate. You know, I wasn't quite prepped properly when the cash market opened, and so now I'm struggling to kind of get into the groove, which is a bit of a shame. So dealing with frustration is something that all of us traders have to deal with like more frequently, of course, than we'd like. I'm not really sure if I have a good tip on how to deal with this yet. Probably it's maybe one of my weaknesses. I don't get frustrated often, but when I do, it can be really off-putting. So yeah, I will get back to you if I find a good method to deal with it. Now I thought actually when I get back to my desk, I can share with you something that I've learnt from the profiles this week. Now this is in the bin, as it's the market I've been following this week, but I think, I suppose like as like a profile concept, I think it can be applied to any market. So whichever market you trade, stay tuned. So here are the binned daily candles, and what we can see here, this is the range we've been in for 4 weeks. So we've got in here ECB, BOE, FOMC, and then up here is NFP, and so there's a lot of positioning in here. The market's broken out, so that's the context for what I wanted to show you. The actual thing with the profiles here are the cash daily profiles. You can see down here, this is that block that I was just talking about. But what I wanted to get into is this part up here. So this is where the market broke out, that's NFP day, and then here we go, once it goes through here in these singles, this is the breakout from the range. The market then drives on, and this was a day here that really kind of like caught my attention. I didn't know necessarily what to make of it. So we had, a tail here at the lows. It then drove higher with value here, and then had another low volume tail at the highs. I think, what this made me think was, okay, we've got a tail at the highs. So if the market fails in here and comes back in the next day, so imagine you can't see that, then it should fill out this value. So, I think with traditional sort of like value mindset, you'd think, okay, this market's got to fill this out before it can push on. But actually the market opened above the base of this tail. So if I put a line in here, it actually, like the bottom price is 1 tick above this lead here. The market then drove higher from that. And so that really made me think about what the stretched value region, the sort of like potentially what looks like an underdeveloped value region really means. And so what I've taken from this now is that rather than being a sign of kind of like a lack of value being established in this sense, like in the momentum sense, the fact that it's stretched and not really bulked out is kind of telling us that there's like a lack of selling interest, right? So that's kind of telling us that the imbalance between supply and demand is so large that this market's directional. And so understanding that in the context means that when the market opens higher, like as in this spike, this gives you the confidence to go and play a continuation, even though you might traditionally look back and say, oh, I'm not so sure about this trade because of how poorly developed value is.